Hello again, everyone, and welcome to another edition of the Forex Market Preview. Let's jump right into the charts and take a look at what we've got for today. Now, let's start out with first of all, let's go to gold. Let's go to gold first and talk a little bit about what happened with gold. Gold having a major spike this last week on the news that's all driven really by China. Now, let me kind of do my best to walk you through what's actually happening in this entire global situation that we found ourselves in. We talk about a lot in the Syndicate and WarRoom, in the 12-week transformation, in some of the other courses that we do, as well as a lot of the free training that I've got. And if you guys are interested, you can go pick up any of it at tradeempowered.com. There's a ton of free training there. Just go to Learn to Trade and check it out. But one of the things that we discuss quite a bit in those meetings is how markets are absolutely psychologically driven. And I make some pretty bold statements there in terms of what I think about markets. And I say the news doesn't matter. And for fundamentalists, for people who believe in fundamental analysis, they tend to immediately, the walls go up. And they get very defensive. What do you mean? What do you mean that news doesn't matter? You're saying news doesn't affect the market, Jason? No. That's not what I'm saying. News most certainly affects the market. What I am saying is it is not the news event itself that drives the market, but rather the reaction that the market has to that news. Now, this might seem somewhat like semantics, but in reality, there's a very distinct difference. So, for example, we have all been in situations where we've seen a very negative news item come out or major negative news event in an otherwise bullish market. And what tends to happen is that negative news event really doesn't affect the market much. Maybe we get a little dip, but then buyers come right back in and they buy it up. There's no real reason. Nobody's really all that scared about what they think. Overall, the market is healthy. Overall, everything is going fine. And so they don't really focus much on the negative event. Likewise, any positive event that might occur during that bullish phase reinforces market sentiment. And when we talk about market, we're really only talking about the combined action of all market participants. And so the market is really nothing more than what's the result of everybody's trading actions all put together. And so when individuals are in a bullish buying type of mode and they see negative news come out, they tend to shrug it off. But when good news comes, it reinforces what they already believe, so they see it as an opportunity to continue buying. Same thing happens on the downside. Is that when things are bearish and people aren't really sure about what's happening in the economy, you tend to see bad news just leads to panic selling, and any buying that occurs on good news is just temporary before everyone looks for a new opportunity to sell. And so when I talk about markets being psychological and the news not mattering, what I really mean is it doesn't matter what that news event is. The only thing that matters is how the market reacts to that news. And there's lots of people out there who would like to believe that fundamentally, if you just look at the market over time, that you can make determinations as to whether or not the market is fairly valued or not. I find that to be somewhat ridiculous. Perhaps on a very long-term time horizon, if you're looking over the next 20 years of how you're going to invest and you're looking at companies that have been around for 10 plus years, and you're using a formula to try and anticipate dividend returns similar to what they do at Berkshire Hathaway, then yes, you could potentially do very, very well trading off of that, or investing off of that rather. But that's really in the realm of investing, not in trading. And so when we look at when I talk to traders, what I try and express to them is you have an incredible tool, the chart, which is the visual representation of all market participants' actions. We talked about the market being nothing more than the result of everyone's individual trading and investing decisions. Well, the chart is the representation of that. And if we know that over the short to mid-term that the news events themselves have very little to do with the overall direction of the market, but rather interpretation, then we can start doing some planning around that. What's been happening for many, many years as we've been in this bull market is that everyone has been treating any negative news, they've just been brushing it off. You know what? Yeah, Greece is a big problem. Yeah, we know, but America's doing well. We've come out of the recovery, and we had some negative news, and so on employment, and so we've seen kind of a little pullback, but that's just a buying opportunity because long term we think we're in the right direction. Well, China's really screwed this up. The Greece fiasco and China following on the heels of that has created a shift in sentiment. And now what you're seeing is people are starting to question, well, we thought that China, I mean, you heard it. If you watched any of the major news outlets that report financial news 3 years ago, there wasn't a single guy who would come on to CNBC and wouldn't tell you that we should expect 5 to 8% growth in China year over year. That, yeah, we're not going to see 10 or 12% growth like maybe we have in the past, but 5%, 8%, that's completely reasonable. Now we find out that China's basically at a standstill. Oil prices, we continue to see stagnant and declining oil prices and stagnant demand. People are seeing things happening in the market right now, and they're finally coming to the realization that we are not nearly on as firm a footing as one would expect. And that's why we've seen over the last several days over 1,000 points lost, over a 10% decline in U.S. equity markets. That's why we're seeing 30% declines in stocks in China. That's why we're seeing all over the world people starting to get really concerned. And so as you look at that, now what does all that have to do with trading? I just want to explain to you, the only reason I bring that up is because I want to explain to you the difference between the news event itself and how the market interprets that news. We don't want to concern ourselves with the actual numbers. It doesn't matter for our purposes here in trading. What does matter is how does the market react to that news? Now, let's go back to gold. I have been eyeballing, and I've told you since around $1,200 an ounce, $1,250 an ounce, back in here, and I was way back here when we started looking at this, but at around $1,250 an ounce, I felt like gold was a decent buy. And we identified on these higher time frames where some of these potential reversals might come in at. So here at around 1,200, you saw how the market kind of baselined here. And then we also identified, we said, okay, and the reason that we identified this area at around 1,200 to 1,250 is we looked left. And we saw previous structure resistance here at around 1,250. We also saw support in here around 1,177. And as you can see, if I drop in some lines here, all right, resistance, support, look at what happened right in that area. You get a test, you get another test, you get a third test, and the market looks like it's going to jump out, then it comes back and tests again, it trades sideways, and then it falls off. And so we looked at 1,200, and we said 1,200 to 1,250 going to be a pretty good place if you're looking for long-term buying opportunities. I'm talking now about investing or longer-term trades. And then we looked left again and we said, okay, well, if we get through that, where are we going to go? Well, the next spot we identified was right in here around $1,100 an ounce. And that's where we were sitting recently. And I said that if we get below that, high likelihood that we fall to around $1,000 an ounce. And I said, I wouldn't be surprised if we fall into $1,000 an ounce. It's a nice round number. The market will be drawn to it. And just be aware that we are likely to see a decline into that zone. And this, again, is going to be another good buying opportunity. So opportunities to buy at $1,200, at $1,100, at $1,000 an ounce as the market comes down. Now, if we look at this on a daily chart, what do we notice? Actually, let's go back out to the weekly here for just a second. What do we know about structure? All right. And guys, one of the reasons that we're doing this today rather than covering some of I'll show you a couple of trades, but the reason that I'm running through this today is because I have no idea what's going to happen on Monday, and I would hate to try and do some predictive analysis on where I thought good buying and selling points were going to be this week based on the shenanigans that happened into the close last week. So I'm just going to teach you a little bit about structure and how to make about decision-making process here in the type of trading environment that we're currently finding ourselves. So take a look at this. What do we know about structure? Well, previously here, let me just consolidate up here. We got a little support level here, a little support level here. Markets continuing to make lower highs. And then we broke to the downside. So if we're kind of drawing this in, and I'm just going to start here for the sake of argument, you can see markets putting in lower highs, boom, then we get a little rally, and then boom, we break structure to the downside. So the market just previously violated the structure, and now we've gotten a rally. Where did we rally back up into? Look left. Structure leaves clues. now sitting at previous structure support, should become resistance. Look left to find your previous swing high. There is the previous swing high there. Stops would need to be above that to look for a selling opportunity. So what I'm suggesting to you is, even with all the bad news, because everyone now is going to be looking at, is gold now the right time to buy? Well, if you're a long-term investor, yes, it might be a very good time to buy. But if you're a trader, you need to have your trading hat on and not your investing hat on. And if you're a trader, previous structure support should become resistance, meaning that there is a high likelihood that the market may come into this level and we may see a reverse of fortune this week, back down into around $1,100 an ounce, and perhaps even drop into that $1,000 an ounce zone that we've been watching for the past 6 to 8 months. And so you can see how, when you've got depending on which hat you're wearing, whether you're wearing your long-term investor hat or whether you're wearing your trader hat, it can have a significant difference on when you're looking to buy or when you're looking to sell. But here's the funny thing. None of it has to do with the news, does it? When I talked about where I think it's a good place to buy or sell gold for long-term investment, what did I use? I used the chart. Now, can I find rational reasons to want to own gold out in the economy right now? I absolutely can, but I'm looking at the chart. If I'm a trader and I'm trying to decide whether to buy or sell, am I looking at the fundamentals and am I looking at what happened last week and saying, well, gold should be a buy next week? No, I'm looking at the chart. And the chart tells me next week or the week after, we're probably going to be looking for a sell. The previous structure support should become resistance, and we should see a decline in gold back down into previous structure if no massive new news events come in. One of the things I was talking with Darren about this week was, I said, I think what is likely is we're going to see some sort of recovery out of this. I wouldn't be surprised to see a 500-point day to the positive side in stocks next week. That something happens, people feel calm, they start buying again, and we just see 500 points right back in the next week or two. And that in turn, the market will look at that and say, oh, look, see, things aren't as bad as we think they are. And we'll get back to the same old shenanigans and the same problems that everybody falls into, listening to news and trying to interpret, well, how's the market going to react to this or that? We don't care. All we're going to do is look at the chart and make our decision on whether to buy or whether to sell based on what we see on the chart, physically see on it, and then we'll go from there. So let me show you a couple of things that we're looking at for this week. Let's get over to Euro USD. Let's get down on a daily chart. Market back up into structure here. So we want to watch this structure level. Right now, if we go down to the hourly chart, which would be our trading time frame, we don't see any kind of reversal set up here. But any sort of double top in this area, any sort of maybe a 2618 trade, which if you guys don't know what that trade is, I teach it to you for free on the site, so just go check it out. But as we're looking at this on the daily chart, look, we're back up against previous structure highs. So be looking at this area into next week for a potential sell. If we pop above that, if we pop up to 114 or 115s, well, then we'll be looking for a little different trade. But as of right now, back up into structure on the daily time frame, we want to be looking for that potential reversal down on our lower time frame chart, on our trading time frame. Now, this would be a counter trend trade, guys, so you got to be aware of that and ask yourself the question, do I trade counter trend? If so, this might be a setup for you. Now let's take a look at a pattern setup here. Again, we're going to bump out to the daily chart here on pound dollar. We've had a decline, a rally up into the 50% retracement. This gives us an idea or a clue that we may be looking at a potential bat pattern. Market's starting to rally here. We have not officially gotten outside of into breakout territory, but if we do, let me draw it in for you here. You're looking at a potential bat pattern here up into the 886 around 158.57. That means 158.57, we're looking for a sell if it will get up there. In anticipation of a move back down towards 156.50s or so. So keep an eye on that for next week as well. So euro next week, and then looking at gold, keep an eye on gold for next week. And as I said, I would love to walk through and give you some more insights into where I thought we would be going. But given what happened on Friday, actually the last couple of days of trading, currency markets weren't terribly badly affected. We got a little bit of a pop. It wasn't massive, but at the same time, what good would it do to cover that when who knows what's going to happen when the markets open on Monday, as volatile as we were going into Friday. So let's just take a step back, keep our powder dry, watch for a couple of good opportunities, and learn a little something about how the market treats news and how it treats good and bad news depending on whether you're in a bullish or a bearish market. So I hope this was valuable to you today. I'll be back here next week. If you want to join me in the syndicate, we do stuff like this every single day. Every morning I come into WarRoom and I work with the syndicate members, and we run through the charts like this, and I talk to you about what's happening, what trades I'm taking. Akil talks about what trades he's taking, and we walk you through the rationale step by step as to why we take those trades. And if you're interested in that, underneath this video is a link where you can go and check it out. Feel free to come in. It's like $1 for the first month. I give it to you almost for free for an entire month so you can see whether or not you like it. So sign up underneath the video, and I'll see you guys tomorrow. Everybody else, I'll see you next week. Until then, be safe, be good. Talk to you then.